Hey, estate planning attorney Paul Rabalais here, and in this video, we're going to talk about the taxes that are involved when inheriting. So this is really for you if you want to understand the tax implications of inheriting money or property or stock, and maybe you want to even learn maybe a couple of things you can do to diminish that effect. So a lot of people, they call me up or they come into my office and maybe a family member recently died, and a gentleman might say to me, Paul, my uncle, he just died, and he left me some money, but I gotta figure I'm just gonna get whacked by the taxes. So whatever you can do, Paul, to help me avoid getting whacked by old Uncle Sam from the inheritance that I'm getting from Uncle, boy, I sure would appreciate it. So what's in the back of his mind is that, the government seems to tax everything these days. There's an income tax at the individual level and the corporate level. And here as we go into 2021, there's talks of increasing the income tax. There's a sales tax when you purchase things. There's a property tax when you own a home or other property. There's a capital gains tax when you sell stuff. And then at every one of those levels, there's a federal tax, then there's a state tax, and in many cases, there's a local tax. So you can only imagine that when you get this kind of freebie of an inheritance, you got to figure just the government is going to have their hands out ready for you to give them a big chunk of that inheritance. Well, not really. Believe it or not, generally, an inheritance is tax-free, not subject to income tax, subject to the few rules that I'm about to tell you about. So, but generally speaking, if Uncle Jethro died and he had bank accounts totaling, let's call it $200,000, and he left it to you and you got all of it, then you don't have to pay any tax on that. Even better, if Uncle Jethro, back when Amazon.com went public, if Uncle Jethro bought a few shares of stock, and over the years that stock grew and grew and grew and grew, and he left you those shares of stock, and you sell those shares immediately after his death, you're not going to pay any tax on that, on the proceeds of that sale, because of the step up in basis. Now, there are a few exceptions to the rule that generally an inheritance is tax-free. So I will say, in all instances, an inheritance is income tax-free. Again, subject to the exceptions that I'm about to tell you. So first exception to just an inheritance is tax-free is the federal estate and gift tax that we have. But it applies very, very rarely in very limited circumstances. So if, in our example, Uncle Jethro died, and as long as he had not made any large gifts in excess of what in today's dollars is $15,000, if he had not made any large gifts to anybody in excess of that $15,000 amount in today's dollars, then when he dies, as long as his estate is worth less than, under 2020 standards, $11.58 million, then those people who inherit from Uncle Jethro, there's no estate tax attributed to that inheritance. Now, the estate tax it's a 40% tax, but it only applies when Uncle Jethro had more than $11.58 million in the fair market value of assets that he had, and it only applies on the assets that are in excess of that $11.58 million. So I don't know what the percentage is, but maybe 1 out of every 1,000 people who pass away are subject to that estate tax, maybe a little more, maybe a little less. I don't know what the details are, but very few. All right, another exception to the general rule that inheritance is free of tax is if you are the beneficiary of an IRA or a 401k. Let's make it a traditional IRA or a traditional 401k as opposed to a Roth IRA or a Roth 401k. If you're a beneficiary of a Roth retirement account, that is income tax-free. But if you're a beneficiary of a traditional IRA or retirement account, you will have to pay income tax on those distributions from those accounts that you receive. Some people ask, Paul, when it comes out of that IRA and I get it, what's the tax on that coming out of that account? Well, The income tax on that depends on what your income tax rate is. That distribution gets distributed to you, and you'll add that as part of your ordinary income. So the tax that you'll pay on a distribution from an IRA or 401k depends on what income tax rate you are in. So that, that you need to be well aware of that. You don't want to, let that, hit you in the head and when you least expected it. And then maybe another minor kind of tax aspect of inheriting is if you are the executor of an estate, or if you are the trustee of someone's trust or someone's living trust, and you are playing that role of being the one in charge of settling that estate, and you do receive executor compensation or trustee compensation. That compensation that you earned, and for example, in my state, the executor compensation is 2.5% of the gross estate, and then the other 97.5% goes to the heirs. But when that executor receives that executor compensation is treated as earned income, and the executor will pay tax on that executor compensation that he or she receives. So general rule, inheritance is income tax free. There are some exceptions when we take a look at the estate tax, the tax on retirement accounts, and executor and trustee compensation. So you have to be aware of what those exceptions are out there. But really, if you want to make sure that you really do what you can do to minimize the tax effect of an inheritance, there's two more things that you can do. The first thing you can do is hit the like button. And then the second thing that you do, if you haven't done already, is subscribe to my channel and then hit the notification bell so you don't miss anything as I keep giving you more estate planning and estate tax and getting your legal affairs in order and getting an estate settled the right way. As I give you more of that guidance as we cruise into 2021 and beyond here, I look forward to sharing more information with you. I hope you enjoy absorbing this content half as much as I enjoy making it. We'll see you next time.